Yeah, good afternoon to all my dear GST enthusiasts, my beloved members, chartered accountants, to this GST and Indirect Tax Committee's webinar on input, service, distributor, and cross charge. Friends, from 1st April 2025, this is the one of the important amendment which is going to affect the multi-state taxpayers. And your GST and Indirect Committee is ready with eminent speaker Dilip Phadke sir on this topic. And friends, we have our dynamic, active chairman who is joining us from Nepal, Rajendra Kumar sir. So I will request Rajendra Kumar sir for his opening remarks to this session. And Rajendra sir, near about 1000 plus members have joined this webinar. So over to you, Rajendra Kumar sir, for your opening remarks. RK sir, your opening remarks, sir.
Thank you very much. I am forced to switch off. Yes, I am forced to switch off my video because the connectivity in the net is not very clear here. So, in fact, all of you know me also. And Umesh Sharma's very bright faces before me, Fatke Saab's very senior faces before me, and other office support staff, Nisarg Secretary Smita Madam, Impreet Kaur, ever dynamic staff of the GST committee. As premised by Umesh Sharma, the concept of input service distributor and cross charge has been made mandatory from April 1, and many of our clients who are dealing in multi-state are very much involved now in this process. Esteemed friends, your committee, the very active committee, the GST and Indirect Taxes Committee, is always at your doorstep, on your desktop, on your fingertips to ensure that you discharge the responsibilities, your duties that has been associated with the GST practice. Even those members who are working in industry, we are with you at all times. We will come with you every week to each one webinar, and CA Umesh Sharma is in charge of this process, and he will certainly ensure that we bring good speakers, we will bring good topics to all of you, we will be exchanging ideas and thoughts. See, your committee is there at all times. Please stay connected to us. If there are issues, please bring it to our notice. Let me tell you today, for the government of India, for almost 20 plus state governments, GST and Indirect Taxes Committee is the first point of any query resolution, first point of anything in GST in this country. So, in that way, I am proud to say that your committee is extremely active. We regularly meet the regulators, the legislators to highlight important aspects in GST. So when you bring you bring to us the notice of any issue in GST, we are there at the doorstep. So today's topic also, Dilip Phadke Saab, sincere thanks to you. You have been a great source of strength, support, and motivation. Thanks to you, Umesh Bhai, for bringing in Dilip Phadke Saab at our doorstep today. Sincere thanks. And over to you, Umesh Ji, for further proceedings as I am in the airport in Nepal coming to Chennai, coming to Delhi. I may not be able to be there for all times. I may have to board the flight. Thank you very much.
Thank you, our chairman Rajendra Kumar sir, as energetic, as active as always. And he is very keen that our members get the updated knowledge. He is addressing from Nepal, and he is a very taskmaster morning, evening for the and yes, as told by our chairman, every week we will be coming up with the different topics and different speakers from across India as well as from the international level. We will try it. So thank you, Rajendra Kumar sir, joining us from Kathmandu, Nepal. Friends, now back to our discussion on the topic. We have eminent speaker Dilip Phadke sir. And friends, do you know how old is Dilip Phadke sir? Dilip Phadke sir is old in this profession as old as me. He started practice in 1976 and I was born in 1976. So, fondly I can say कि मेरी जितनी उम्र है सर आपका उतना तजुर्बा है. So that's the gracious presence of our speaker who is serving this profession of chartered accountancy from last 48 years. He has completed 400 plus lectures on VAT, service tax, and now GST. And sir, we wish your knowledge sharing exercise to continue till further so many years and our members get benefited from your wisdom, your experience, and your knowledge. Friends, Dilip Phadke sir is a well-known speaker in WIRC as well as western part of India and across India. He has given lectures at many forums and also authored many books. And one of the important contribution of Dilip Phadke sir is the weekly magazine of Maharashtra GST News, which is published in Maharashtra, and sir regularly contributes for the magazine. So he is updated and he is having latest knowledge. Don't go by his face. He may look an old person, but his knowledge is always current, always new. So he is fresh face by his knowledge. यानी एक कहते हैं ना उम्र 55 की दिल बचपन का, वैसे दिलीप सर का आज भी दिल में जीएसटी इनडायरेक्ट टैक्स धड़कते रहता है. So with these words, I welcome you, Dilip sir, for this webinar, and I will request you to share your knowledge, your PPT. Over to you, Dilip sir.
Thank you, Rajendra Kumar sir, the chairman, and Umesh Sharma ji, the vice chairman, for inviting me and giving me a chance to speak on the forum of our institute all over India. I hope that I'll be able to do the justice to whatever chance you are given. So let us start with the I hope that everybody is able to see the slide. Unmesh sir,
Yes,
is
sir.
it? Yes, okay. So let us start with the topic. Now, first, let us try to understand the concept of ISD. The basic, let us go little back. When in 1947 we became separate country, independent, there were two major taxes which were controlled by central government. They were only on goods. There was no tax on the services. So it was excise and central tax for the purpose of the revenue to the central government, and sales tax for the revenue to the state government. In time to come, to increase the revenue, state started to tax other forms of goods also, that is the works contract as well as leasing. In this process, the goods were taxed. In 1994, service tax was introduced. And originally, in service tax, the emphasis was only some particular list of services. Afterward, they converted it to the negative list. Till 2004, there was no SENVAT credit and there was no question of ISD. So when the SENVAT credit was started in 2004, the question of ISD to distribute the credit came, and they started with the concept of ISD at that time. Originally, the credit of excise was allowed under service tax under excise, and it was possible to take the credit and transfer it to any of the branches as per their intention, as per their wishes. There were no specific rules for the purpose of distribution. Afterwards, in 2016, CBEC wide notification 13 of 2016, with effect from 1st April 2016, came out with the rules for sharing the ISD with the other branch officers, let us call it as. Afterwards, the question arose when the ISD concept will be applicable. So basically, it is a question when there are multi-locational entities. Multi-locational means that there is one head office and there are some branches. Branches are for the purpose of various purposes like production, as well as for development of IT and other things. So basically, the multi-locational entities started in the beginning for the purpose of development. The centralized accounting was possible because of the development of infrastructure as well as the electronic systems and computers. So centralized accounting started, centralized accounting, payment, and mainly head office was keeping the control by receiving the invoices, maintaining the accounts, maintaining the payment, making the payments. There were SAP which were introduced. Services were consumed at all the places by the distinct entities at various places. Now, these different entities were registered under GST either separately or commonly. So, in 2017, when the GST regime started, proper system was required for distribution of tax credits taken by the head office with the distinct persons. ID was not relevant if it was a single registration or the registration was only for the head office or for the factory. There was no necessity of ISD registration. So ISD office, why it was necessary, let us first understand it. Now ISD concept, which came into picture, requires the authorization of the government to distribute the ITC. And unless until that particular ISD is registered under the GST Act, it was not possible to distribute it. So, first necessity is it should be registered separately under the GST as ISD. Now, second case is that GST is a destination-based tax. That is, it is a credit should be availed and used by the state where the services are consumed. Now, if the head office receives the invoices and the particular services are consumed by the different states, the ITC relating to those invoices should be transferred to the state where the services are consumed. Now, the ISD mechanism is there for the purpose of transferring the ITC to the proper state where the services are consumed ultimately. So ISD facilitates transfer from head office, the ITC to the various states which are entitled for the purpose of ITC depending upon use or consumption. Now, what will happen if there was no ISD mechanism? ISD, if it is not there, first of all, head office will not be able to claim the ITC because the services are utilized by the states. So head office will not be entitled. Now, distinct entities, that is the state offices, will not be able to utilize it, the ITC, because the invoices were not in their registration. Now, we'll try to understand various services which are treated as common services for the purpose of the understanding our topic. The services like audit, tax consultation, legal, telecommunication, banking, software, insurance, conference, membership, etc. are basically the common services which are utilized by all the offices of the organization. Now, when that is the case, if the invoices are received by the head office, the question of distribution will come relating to the credit. So input services are common to all the units, and generally such type of services are called as common input services. Now, what we are going to see today, first of all, we are going to refer to the definition of input service distributor, then why compulsory registration is necessary, multiple registrations, how they are taken and why it is necessary to take it, then whether separate registration for ISD is necessary. Similarly, we are going to see the documents from which the ITC will be availed by the ISD, how to distribute the credit, what documents are to be prepared by the head office and by the ISD, the manner in which the ITC should be distributed. All these things we are going to see and learn today. Now, first of all, let us go to what is the meaning of input service distributor. Now, the definition given in section 2, subsection 61 says that input service distributor means an office of the supplier of the goods or services or both, which receives tax invoices toward the receipt of the input services including invoices in respect of services liable to reverse charge mechanism under Section 9, subsection 3 or 4 of CGST Act, 5, subsection 3 or 4 of IGST Act, for and on behalf of distinct person referred to in Section 25 and liable to distribute the ITC in respect of such invoices in the manner provided in Section 20. Now, if we try to analyze this particular definition, they have said that input service distributor means office of the supplier of the goods or services. Now, according to me, why this particular definition includes office of the supplier of the goods also when it is a question of distributing the ITC on the services. Now, basically, ISD is an office of the supplier who is already registered. So if you go for taking the registration number for the input service distributor, first, when we try to log in, we have to select the type of the organization. Over there, we have to select it as a taxable person. Then only you will be given the category of input service distributor afterwards. So in that case, what it means is the taxable person having multiple offices takes the registration as an input service distributor. So the registration for the ISD is new, definitely, but the original supplier for whom the ISD is taking registration is existing. Now, they should receive the invoices for receipt of the input services. That is, input service distributor should receive the invoices for the receipt of the services, input services. Now, basically, they have said that including tax paid under reverse charge mechanism under 9394, according to me, there is some anomaly over here. Basically, because the invoices on which RCM is payable shall not be in the name of the ISD. Because if the RCM is to be paid, the payment function is not available with the ISD. And in that case, what is necessary is the invoices where RCM is payable will have to be taken in the GSTIN of the head office, so they can make the payment. So according to me, the input service distributor will receive the invoices for input services which is consumed by the distinct persons, but on which RCM is not payable. They are charged by the supplier directly. After receiving the invoices from the suppliers, the third function of the input service distributor is to distribute the ITC collected between different distinct persons. When they have to distribute, they have to prepare certain documents. We are going to see separately and how it should be prepared afterwards. So just now it is sufficient to understand that they have to issue an invoice or a debit note for distributing the ITC which they have collected by receiving the invoices from the suppliers. Now, what is necessary? The services which are there should be consumed by the distinct persons and not by the ISD. ISD is not the office which purchases anything or there is any output or supply. So it is only a distribution center, we can call it as, distributing the ITC which is collected, and there is no other function which is to be done by the ISD. So basically two functions: receive the invoices, distribute them, and file the returns as and when it is necessary. Now let us see what are the features of ISD. ISD can be used only for transferring the ITC. You cannot use it for any other function. Secondly, the registration, ISD cannot avail the input of the material and the capital goods. So only the ITC relating to the services can be collected by them. They cannot distribute the ITC relating to the material, that is inputs and capital goods. Section 24 makes it compulsory for ISD to take a separate registration. So it is necessary that the ISD should separately register from its normal business office. And it is neither a supplier nor recipient of the goods. And it is basically for availing and distributing the common ITC, and there is no other purpose for which it is done. Similarly, ISD cannot be used for the purpose of transferring the credit from holding company to subsidiary company or group companies or related parties. ISD can be availed, ISD can avail the ITC. How? So what are the documents which are available? First of all, there will be invoices received from the supplier. Now it is necessary that these invoices which are received have fulfilled the conditions of section 31. So they should be compliant with section 31. It can be taken from the debit notes issued by the supplier of the services under section 34. Now, when debit notes can be issued by the supplier, we'll be seeing it separately. ITC will be available to the ISD from the head office, which is paying the RCM. Now, if you see Rule 39(1)(a), or if you see the Rule 54(1)(a), it gives a format and it specifies that if RCM is payable, the RCM will be paid by the head office, and after paying the head office, by paying the RCM, the head office will prepare a separate invoice in favor of the ISD. So this particular process is to be followed. We'll be seeing it separately. So I will say that the invoices received from the head office for payment of RCM, which is to be distributed by the ISD, will be also a document from which the ITC can be availed by the ISD. Now, ISD has to avail the ITC only on the invoices which are appearing in 6A. Now, how to do it? We'll be seeing it because 6A will be available only after 12th. Now, when it will be available on 12th, how to distribute it? That's what we are going to see it again afterwards. Vendors providing common services used by head office and distinct person should raise the invoice on ISD, that is necessary. In case, now let us take a simple case that the vendor who is providing services exclusive to, let us say, only one distinct person, he wants to raise the invoice. Can he raise the invoice in directly on the distinct person? Answer is yes. He will be permitted to issue the invoice directly to the distinct person. But suppose if invoice is raised on ISD, what should be done? Then in that case, ITC will be distributed to the said distinct person by the ISD by using mechanism which is prescribed. Now let us see what is the distinct person. Now distinct person is defined in section 25(4). It means a person who has obtained or is required to obtain more than one registration, whether in one state or union territory, more than one state or union territory, shall in respect of each registration will be treated as a distinct person. So, in current scenario, when the business are expanding, it is necessary to have the offices at various places. It is not possible to conduct all the business transactions from one place. Now it is necessary that everywhere the business will start the unit, it should take a registration. Now when business is owned by same person having same PAN number and it opens a separate office in same state, generally it is not necessary to have a separate registration. But suppose if there is a business vertical and they want two registration numbers in same state, then in that case, there can be two or more registrations in same state also. So what is a distinct person? Distinct person means all the entities under same PAN which are registered in the same state as a separate person or different state or union territories as a separate person. So if there is any transaction between these two persons, it will be taxable and it will be treated as a supplier. Now, according to section 24, subclause 8, the input service distributor, it is necessary to take separate registration. Now, if you refer to rule 8, application for registration should be in form GST REG 01 and every person who is becoming a ISD has to apply for the separate registration number as a ISD. Now, what are the documents which are available that already I have discussed with you? So, the documents which are available are only three. which we have already seen. That is, one is invoice given by the supplier, second is invoice given by the head office, and third, the debit note issued by the supplier in accordance with the provisions of Section 34. So, on the basis of these three documents, the ISD will be availing the ITC. Now, it is necessary that the persons who are raising the bills should put the number of GSTIN of the ISD, otherwise they will not get the credit. Now let us say head office and ISD are in the same office. Their number up to 12 digit will be looking same. So it might be possible that many a times the head office number will be used because it is already used by the suppliers till 31st March. So if that happens, the office should give the instruction clearly that the particular invoices should be raised in the name of or number of ISD only. But suppose by chance it is not possible or some suppliers are not ready to change, then in that case, the head office will have to transfer that particular amount by preparing a separate invoice on ISD for the purpose of distribution. Now, what are the documents which are to be prepared by ISD? Now, to distribute the ITC which has become available with the ISD, it is necessary that they should prepare an invoice. Now, this particular invoice is different from the invoice which we prepare normally. So, let us try to understand what is the difference. If you see the contents of the ISD invoice or a credit note, it will contain the name and address and GSTIN of the ISD, consecutive serial number, then date of issue, name and address and GSTIN of the recipient. Now, generally, the name and address of the recipient will be of the distinct person. Then amount of the credit distributed. Now, over here you will find out that there is nothing like taxable value or the rate or anything else. It is directly giving the amount of credit, that is the ITC to be distributed. There is no other column which is necessary. But it is necessary to mention on the invoice that this particular invoice is for distribution of the ITC. And afterwards, it is necessary that it should be signed. So that is the document which is to be prepared by the ISD according to Rule 54.1. Now, if we go to 54.1a, which is introduced in 24 and which is applicable from 1st of April 25, this is the case which is applicable when the services on which the amount is payable under reverse charge by the head office is there. So let us take a simple case that there are security charges on which reverse charge is to be paid. Now, if the supplier gives the invoice under the GSTIN of ISD, ISD cannot make payment function. So what will happen? It will not be possible for them to pay RCM. So what is necessary? It is necessary that the particular invoice shall be prepared by the supplier in the name of the head office. Once they prepare the invoice in the name of the head office will prepare 31F, whether it is applicable, self-invoice. They will make the payment of the taxes under reverse charge. And after making the payment, they will prepare an invoice in favor of the ISD. So these are the contents of that particular invoice which is to be issued by the head office to the ISD. So what are the contents? Let us see over here, there is a little bit difference. The name and address and GST number of the taxable person who has made the payment, serial number, date, GSTN of the supplier of the common service, that is ISD, invoice number whose credit is sought to be transferred to the ISD. So over here, you have to give the details of the supplier's invoice also on which the RCM is paid. Then name and address of the ISD to whom the credit is transferred. Over here, the taxable value, rate and amount of the credit transferred is necessary. And ultimately, the signature. But over here, we have to remember one thing, that the taxable value, which is mentioned in the supplier's invoices and which is mentioned in the invoice prepared like this, that is 1A, should be same. They cannot be different. Then there are other documents which are to be prepared. These documents are given to you under Rule 39 1A. So over here, whatever just now I discussed with you, the same thing is given, that whenever any invoice is received by the head office on which the RCM is payable under section 93 or 94, 53 or 54, then head office should pay it and prepare a invoice which we already discussed. Now, important point is, whatever document is prepared by the ISD, that is invoice under section, Rule 54(1), the ITC will be available to the distinct person, and that is given to you in Rule 36, subclause E. Now, there are other documents also which are to be prepared. Rule 39(2) tells you that if the amount of ITC is distributed, now let us say that I transfer to, let us say, my office A, ITC of 10,000. But actually, I find out that 10,000 is wrong. I have to transfer him only 8,000. To reduce that 2,000, I'll prepare a credit note. And suppose that particular 2,000 has to go to the distinct person C. Then in that case, I'll prepare a debit note in favor of the distinct person C. So this particular preparation of debit note and credit note is given over here. That is section Rule 39(2) and 39(3). So whatever these documents are prepared are to be given or shown by the ISD in form number return, form GSTR 6 for every month. And that particular form we are going to discuss separately. If we go to section 39(4), now Rule 39 or the last paragraph, you will see it is Section 39, that ISD has to prepare and furnish a return electronically within 13th day after the end of every month. So actually, they say that you have to avail the ITC from 6A, but 6A will be available on 12th only. And if you consider the quarterly filers and IFF, etc., many times that particular 6A will be available on 14th. Now, what to do? That is a thing which we will be discussing afterwards. But the return, if it is not filed within 13th day, that is on 13th of every month for the previous month, then per day late fee of 50 rupees is payable. Now, I can't understand, for the purpose of 50 rupees, payment function late fee is allowed to the ISD. Now, section 20, how to prepare the document, that is given over here. So, it says that an office of the supplier of goods and services which receives the tax invoices toward the receipt of input services. Now, again, according to me, the invoices which are on which the RCM is payable cannot be received in the name of ISD, but still there is a this particular point that it should be in the name of ISD. So that particular invoice shall be required to be registered. So that particular person who is going to receive these invoices will have to register separately as a ISD under section 24, subclause 8. Subsection 2 of section 20 says that ISD shall distribute the credit of CGST or IGST charge on the invoices received by him, including the credit of CGST or IGST in respect of services subject to levy of tax under 934/534 paid by the distinct person registered in the same state as the ISD in such manner during prescribed time and subject to restriction and conditions. So ISD has to distribute the CGST, SGST, IGST, UTGST, whatever is applicable on the supplier's invoices, they will have to distribute. Now, for how to distribute it, that is given to you in subsection 3. It says that the credit of central tax or state tax shall be distributed as CGST, SGST or IGST and integrated tax as IGST or CGST. Now, if you see the rule, which is 39 rule, you will find out that over there it is stated that integrated tax IGST has to be distributed as IGST. But section 20 subsection 3 permits the distribution of IGST as IGST or CGST. So this is an anomaly. According to me, if this is what is given in the section, whatever the provisions of the section will prevail, so we can distribute the integrated tax available in the form of integrated tax or CGST. Now, how to distribute? Rule 39. Now, this is a lengthy rule and it is important from the viewpoint of understanding the particular way or method in which the credit should be distributed. Sub-rule A tells you that the ITC of a particular month shall be distributed in the same month only. And after distributing, you have to furnish Form GSTR 6. The date on which you have to submit GSTR 6 is 13th. So first of all, let us try to analyze this particular point, sub-rule A. So let us say I am preparing the invoices for the month of April. Whether I prepare the invoices for the month of April in April itself, or I'll prepare it on 13th of May when I get 6/8. According to me, as and when you receive the supplier's invoice, you have to decide the beneficiaries who are going to get the ITC and distribute it according to the ratios which we are going to see. On that day, maximum late will be the last date of the month. So let us say if the date of the invoice is 5th of April, 25. The invoice which is prepared by ISD shall be either 5th of April or it cannot be later than 30th of April. So all these particular suppliers invoices, as and when they are received, correspondingly, you should prepare the invoice for distributing the ITC to the beneficiaries, which are called as distinct persons. If we go to point B, they say that the amount of ITC which is distributed shall not exceed the amount of distributable credit. So what is the difference between the amount distributed and distributable credit? Now they have connected this particular amount with 6A, which will be coming as and when the suppliers file their GSTR 1. So as soon as GSTR 1 is filed by the suppliers, dynamically it will appear in 6A. Now you have to compare whatever you have distributed with whatever is appearing in 6A. So the amount distributable is decided by Form 6A. Then point C. Credit of tax attributable to the recipient shall be distributed only to that recipient. Now this is case where the ITC is going to only one recipient. The services, let us say repairing of machinery, was done at a particular Chennai office or Chennai factory. The invoice is prepared in the name of the ISD. Then in that case, the ISD should distribute that particular credit to Chennai only. Point number D tells you that if the credit is available to more than one recipient, it should be distributed pro rata on the basis of turnover of that particular state vis-a-vis the aggregate turnover of the entity or the recipients which are entitled for the ITC. Let us take that there are 5 distinct persons and the supplier has provided the services only to 3. Then in that case, the turnover of only 3 should be added, used as a denominator, and the particular state's turnover should be taken to find out the proportion. So let us say that Karnataka, Chennai and Calcutta are 3 distinct persons which are entitled, and the turnover is 10 lakhs, 20 lakhs and 30 lakhs. Then the distribution should be in the ratio of 1:2:3. So total will be 6. So that way you have to divide when the ITC is attributable to more than one recipient. Now my question over here is, if there is any other method which is available for the purpose of distribution, which is more appropriate, can we use that? Answer is no. Basically because if you read the wording, the credit shall be distributed to such recipient to whom input service is attributable, and such distribution shall be on pro rata. So when the word used is shall, we cannot use our discretion. It is necessary that the whatever is given in this particular rule has to be followed. So over here, let us take a simple example. Actually, stitching charges are paid for the uniform which is to be used by the employees. In these, let us say there are only 2 beneficiaries, Chennai and Karnataka. The number of persons employed in Chennai are 10 and Karnataka are 50. But the Chennai's turnover is 50 lakhs and the Karnataka's or Bangalore's turnover is 20 lakhs. Now what will happen? Actually, the amount of the credit should have been distributed in the ratio of employees. But over here, they say it has to be distributed in the ratio of turnover, and that also previous years, which we'll be seeing when we go to the relevant period. So this is going to be a little bit anomaly, but ultimately the credit is going to the destination state by distribution by the ISD. So some difference over here and there because of such formulas may not be affecting the government much. Point number E, input service attributable to all recipients. So if there are 5 distinct persons and one head office is also having output, then in that case, the ratio should be found out by taking the total of the turnover of all 6, that is 5 distinct person plus head office. Even if there is no output given by the head office, but it is registered under GST or unregistered under GST, it is necessary that the amount of ITC should be allotted to it. But my question is, if there is no turnover, done by the head office. There is no question of transferring the ITC to the head office. Now, whatever I discussed just now in respect of point number D and E is given to you in formula at point number F. Now, point number G tells you that the ISD has to distribute the amount as eligible or ineligible separately. Now, eligibility or ineligibility, which is restricted, is only in respect of section 17(5). So, if that particular ITC is ineligible according to section 17(5) provision, then once it is distributed, that will remain ineligible. There, it cannot be converted into eligible by the branches. So that is what we have to understand. Once it is ineligible, will remain ineligible always. Now, why to distribute the amount which is ineligible, and whether that particular ineligible amount should be shown as received by the branch office? Answer is yes. Because ultimately the consuming state should get the benefit, whether it is eligible or ineligible. Now, in between, in our case also, we were distributing only eligible ITC. They come out with the circular that the ineligible ITC also should be shown in the returns. So, over here also, it will be necessary that ISD distributes the eligible as well as ineligible, but it is necessary that it should be distributed separately. Similarly, in point number H, it is stated that CGST, SGST, UTGST and IGST shall be distributed separately, and for that you have to again use the provisions of clause D and clause E. Point number K tells you that the invoice, ISD invoice, not normal invoice, ISD invoice given under Rule 54 sub Rule 1 shall be prepared by the ISD for the distribution of the ITC. Now, there are rules regarding how the ITC is to be transferred, and that is given in sub-rule I and J. I have prepared it in a table form. So, first case, the ISD and recipient are in the same state. So, let us say the head office is in Pune and the branch office is in Nagpur. Both are in same state. Then in that case, this rule will be applicable to them. So you have collected or accumulated the ITC, which is of integrated central tax or state tax. Over here, you can transfer it. Integrated tax as integrated or CGST as per section. You can transfer central tax as CGST, state tax as state tax or union territory tax. So this is applicable when the distributor and beneficiary are in the same state. But suppose the distributor, that is the ISD, and distinct person are in different states. So one is in Maharashtra, another is in Karnataka, and the accumulation is of integrated tax, central tax and state tax. Now, central tax or state tax is of that particular state, and that cannot be used by the distinct person of Karnataka. Then in that case, what they have given is integrated tax should be distributed as integrated. Central or state tax also should be distributed as integrated tax. Now, the credit note, when it is to be distributed, issued, or debit note, when it is to be issued, is given to you in point number L and M. Now, if there is a credit note received from the supplier, this credit should be transferred to the distinct person by issuing a credit note by the ISD. And it should be in the same ratio in which the original credit was distributed among the beneficiaries. Now remember one thing, that ratio will not change in a financial year, because when we'll go to the relevant period, we'll come to know that the relevant period means the turnover of the previous year. So that is going to remain constant. So there will not be any problem for distributing or deducting by way of credit note the amount by issuing the credit note, because ratio is going to remain same. Now there is a debit note which is given to you in sub rule M. Now many a times the supplier of service increases their rates and they send a debit note afterwards. So the debit note will contain the tax on that particular amount of the service, and this particular amount which is there is also to be distributed by preparing a ISD debit note or invoice, and it should be in the same ratio in which the original credit was distributed. So what should be included in GSTR 6? All the invoices which are issued, all the credit notes which are issued, as well as all the debit notes which are issued by the ISD. Now point number N of rule 39 tells you that ITC is required to be reduced. Then in which case? Let us try to understand. The ratio we will be using will be the same that already I have discussed with you. Reduced from the amount. Now whatever you are transferring, let us say you are transferring 1,000 rupees debit to the beneficiary, and credit which you are transferring will be, let us say, 200. Then the net amount which will be transferred to the beneficiary will be 800. But take a reverse case. The benefit ITC which you transferred is 1,000. But suppose the credit note which is received is, let us say, for 1,200. Then in that case, what will happen? Negative 200 will be transferred, and this negative which is transferred will be treated as output tax liability of the beneficiary. And if he has got the credit less, then he will have to pay it. But let us try to understand the ratio. It is stated that it is a relevant period. Now, relevant period means what? It is defined as if the recipient of the credit have a turnover in their state or union territories in the financial year preceding the year during which the credit is to be distributed, the said financial year. So if I am trying to find out the ratio for 25-26 financial year, I will be taking into consideration the turnover of all the beneficiaries which they have done in 24-25. Now it is quite possible that some of the beneficiaries which are there in 25-26 are not having any turnover in 24-25, then in that case they say that the turnover of the previous quarter should be taken into consideration. So instead of previous year, if there is any new entrant for getting the benefit, then the ratio will change and ratio will be the previous quarter's turnover. Now, recipient of the benefit or credit means a distinct person having same PAN. So that only can be recipient in the ISD invoice. There cannot be outsider who can get the benefit of ISD invoice. The term turnover is including all the services and goods turnover, but basically it should not include the taxes which are applied on those particular amounts. Now, how to prepare the credit note is described earlier. We already discussed it previously, so I will not take it again. Details of distributable, now relevant points. First, distributable amount would be available in GSTR 6A. We are going to see 6A separately. Whatever suppliers upload the invoices on the GSTIN of ISD will appear in 6A of ISD. This particular amount is distributable amount, and whatever you are distributed according to the invoices which you have received and which you have shown in GSTR 6 will be the distributed amount. Point number 2, which you have to remember, is you have to file the return on or before 13th of the subsequent month. So April month's return shall be filed on or before 13th of next month. Now remember one thing, whether you will be able to file the return if you haven't got 6A till 13th, what to do? There is no answer. Third point which you have to remember, if there is no ITC to be distributed, what should be done? Then also for the ISD it is compulsory to prepare a new return and file it. If you don't file it by or before 13th of the subsequent month, per day you have to pay 50 rupees. And remember one thing, for this, they have got a cash register also for the ISD. Fifth point which you have to remember is credit needs to be distributed amongst all units, whether they are taxable, non-taxable, whether they are registered or unregistered, whether they are fully exempt or taxable, whether they are export-oriented units or not. So it is necessary that you have to distribute it to all the units. Now, if you distribute the credit in the wrong way or by wrong method, what will happen? Then there is a penalty prescribed in section 122, subsection 1, clause 9, that you will have to pay higher of 10,000 or amount of ITC availed or ITC distributed irregularly. So that will be the penalty which will be payable and that penalty will be payable by the ISD only. If you distribute, that is ISD distributes the credit to non-taxable unit, what will happen? The non-taxable unit or exempt unit, if they get the credit, they cannot utilize it. If it is partly exempt and partly taxable, then Rule 42 and 43 apply. So it becomes a cost to that entity. Whenever the ISD distributes the ITC to an exempt unit or partly exempt unit. If ITC is distributed in the wrong proportion, then you have to prepare a ISD credit note for the person to whom you have distributed excess. So let us say there are only two beneficiaries. One is Karnataka, another is Chennai, Bangalore and Chennai. Actually, you have to distribute, let us say 10,000 and 10,000 to both the units equally. But by mistake, you transferred 8,000 to Bangalore and 12,000 to Chennai. Now, what will be necessary? You have to prepare the ISD credit note, reducing the amount extra transferred to Chennai, and you have to prepare a ISD invoice to transfer it to Bangalore, who got it less. So this particular provision is also given in our Rule 39. If there is an export-oriented unit and you transfer the ISD to such units, what will happen? If they are paying IGST on export for by payment of tax, then they can utilize this ITC for discharging the liability. And if they are not paying the taxes, but they are going for LUT, then in that case, they'll have to claim the refund for whatever amount they get as ITC. This particular ITC can be used by them for paying their other liabilities also. It is not necessary or restricted to use it only for paying the export liability. Now, return, how it is to be submitted. ISD has to submit a return in form number 6 on the basis of details contained in form number 6A. That is what is given to you in Rule 65. Now, in this case, what will happen? When we'll go to the actual form of GSTR 6 and GSTR 6A, how to do it, we are going to see it. There is section 21 that debit note, credit note, and all procedure for correction of errors are given to you. But suppose after the year is over, still you have not corrected the mistake. Then in that case, the ISD section 21 tells you that the ISD distributes credit in contravention of the provision contained in 20, results in excess distribution of the credit to one or more beneficiaries. The excess credit shall be recovered from the beneficiary. And provision of section 73, 74, now 74A will be applicable. So remember one thing, if the mistake is made by ISD in distribution, the person who is going to suffer is the distinct person who is the beneficiary. Now let us discuss the Form 6 in detail. Table 3, input tax credit received for distribution. Now if you see the columns, it gives you GST number of the supplier, invoice details, number, date, value, rate, taxable value, and amount of tax. Now over here, the ISD has to give all the details of the invoices received by them. Let us say he is preparing the return for April. So all the invoices received by ISD will be manually filled in table 3. The total of table 3 will be the total amount of credit which is received for distribution in the month of April by ISD. Now this particular credit which they have received has to be distributed as eligible and ineligible. So the total ITC available, now over here, if you see, over here there was a question of taxable amount of tax. But in table 4, we have to deal with only tax amount. There is no necessity of dealing with the taxable amount or the amount on which the tax is charged. So we have to divide the total ITC into two parts. The ITC which is eligible and ITC which is ineligible according to section 17(5). So the total of eligible and ineligible should match with the total of table 3. Now this particular eligible and ineligible is to be distributed amongst all the beneficiaries. So table 5 gives you the distribution of input tax credit which is reported in table 4. So table 5 gives you two parts, distribution of eligible credit and distribution of ineligible credit. Now over here you have to remember that GST number which is to be given over here by you will be the GST number of the beneficiaries that is the distinct person only. Now this is the case, table 6, amendment in information furnished in earlier return in table number 3. Now this particular part you have filled in April. Now let us say the 6A doesn't show it. What do you do? Whether you will show it in 6 or you will show it separately. Or take reverse case. The 6A shows that particular invoice which ISD has not distributed. Will you show it in 6? Answer is no. Table 6 is only for amendment in the information furnished in the earlier return. So if there is any change, there is a debit note or there is a credit note issued or invoice issued in the previous month and you want to make any change in that, then you have to fill up table 6. So it tells you information furnished in table 3 in earlier period was incorrect in respect of what? That's what you have to give. If you are issuing any debit note or credit note, you have to give it in 6B, original. If there is any amendment to the debit note or credit note, you have to give it in table 6C. So that is how you are going to use table 6. Now the question will arise, if there is a difference between 6 and 6A, that is the amount which you have shown in your register, and then afterwards in 6 is different from what is appearing in 6A, what you should do? Then table 7 will automatically prop up the differences. So 7A will give you input tax credit mismatch. So if you have claimed more, it will be shown over here. If you have claimed less, that also it will be shown over here. So this will be automatically filled up. You are not to do anything. That is what is given, because up till now I have not tested it, but it is possible that this particular 7A and 7B will be filled up automatically, giving the differences in the figures which you are declared in 6 and they are available in 6A. Table number 8 is for giving the differences. That is, I told you that 2000 were distributed more to Chennai than Bangalore. Over here, you will have to show the input tax credit. Sorry, 8 is not for that. Distribution of input tax credit reported in 6 and 7. That is, whatever is the total of table 6 and total of table 7 will be distributed by you in table 8. Table 9 is for redistribution of the ITC. So if you have distributed more or less amount, they are going to be equal. Somebody will be getting more and somebody will be getting less. So as such, there will not be difference in the amount of debit note which you have issued and ISD invoice which you have prepared. So if there is any mismatch or wrong recipient, then it will be corrected by using table 9. So table 9 is specifically for making the correction of wrong beneficiary. The amount which was transferred to Karnataka was less and it was more to Chennai, will be correcting it in table 9. Late fee, whatever is payable for late filing of 6 will be coming over here, that is table 10. Then refund claimed, if you have already deposited the cash for ISD in cash ledger and you want refund of it, then you can claim it over here. So for the purpose of payment of late fee, they have got cash ledger. But for the purpose of RCM, they are increasing the work of the dealers. That is, first take the invoice in one. Now let us take a simple case. What happens in this? If April month's invoice, you have to pay the RCM. You will pay it when? You will pay it in May. You will prepare the invoice on the ISD in the month of May. What will happen? ISD will get the credit which is distributable in the month of May. So in the month of May, that particular credit will be distributed by the ISD. So what happens? Basically, 1 month's delay takes place by head office paying the RCM and preparing the invoice on the ISD. Now let us go to 6A. Now 6A is dynamic. So it will be necessary for you to keep a track, just like we are keeping the track of 2A, and find out whether there is any difference in the invoices which you have accounted and which are uploaded by the suppliers. So 6A will give you, that is the ISD, input tax credit received for distribution. So it will give the GSTIN of the supplier. It will give the invoice details, taxable value and amount of tax. If there are any credit notes or debit notes issued, then also it will be shown in table 4. So it is same like our 2A. There is no much of the difference. So this is the form or the credit which you have to match with your books. Now, let us go to the cross chart. So first of all, try to understand one thing, that till 31st March 2024, most of us were using cross charge. Now cross charge, in short, what it is, because I have to give time for the question answers also. So let us see what is a cross charge. In case of multi-locational entities, there are services and there are multiple offices. Now these offices are like factories, depots, warehouses, outlets, service outlets, divisions, branches, etc. So it is quite possible that a company might be having offices running in hundreds or thousands. Now to keep a track, it becomes necessary that central office performs various functions. And these functions, when they want to perform, they have to spend also on various things. Now, when they spend the amount, are they going to transfer that or they are going to utilize it? Let us say a laptop or a computer is purchased by head office, or stationery is purchased by the head office. It will be used by the head office or central office. I'll call it as head office. So they purchase capital assets, they purchase inputs, they spend for services like internal audit, rent, electricity, conveyance, etc. So in this case, the bills are raised in the GST number of the head office. And what they do, they generate various services internally. Now these internally generated services are support services for all the offices, sometimes all over the world also. Now in this case, the services will be of what type? HR services, marketing services, management services, accounting services, IT support services, IT development services. Now there is a AI and all those developments. So all these developments will be done by the head office. And who will be the beneficiaries? The beneficiaries ultimate will be the distinct persons. But can I transfer it to the beneficiaries directly? Answer is no. Then in that case, the cross charge becomes necessary. Now, why cross charge is necessary or compulsory, or why head office should do it? Let us try to understand. Now, if you refer to section 9, it says that the tax should be levied on the supplies made by a taxable person. Now, section 7(1)(c) says that if there are any activities which are performed by one distinct person for another person, even if made without consideration, it should be treated as a supply. Now, in this case, if we read these two together, what it means that there is a supply of the service or the things which are generated by the head office for the purpose of or benefit of the distinct persons. Now, it is also necessary to recover the ITC on the bills which are received by the head office. So many times the cross charge is done with the viewpoint of the branch offices and branch accounting is done. But otherwise, what are the provisions into CGST Act? So once we understand why cross charge is done, whether it is compulsory, whether it is not compulsory under GST, that's what we are going to see first. Now, whenever anything is supplied by one related person to another related person, there is a question of valuation. Now, valuation rules will be applicable to the cross charge. So what it says, Rule 28 gives you the value of the supply between the distinct person should be open market value. If open market value is not available, value of the supply of like, kind and quality. Then sub-rule 3 says that if the value is not determined under sub-rule 1 or 2, then it should be determined under rule 30 or 31. Now, rule 30 says that the value should be 110% of the cost of the provision of such services. Rule 31 says that using reasonable means consistent with the principles of provisions of section 15 can be applied, and it further states that in case of services, one may follow Rule 31 and ignore Rule 30. So if it is goods, it is necessary that it should be done by method of open market value or 110%. But in case of services, we can go for consistent method of principle of valuation. Now, second proviso, if you read, that it states clearly that if the recipient is eligible for full ITC, then value declared in the invoice will be deemed to be open market value. Now, remember one thing, if the invoice is not prepared, it will be presumed that the particular value is zero. If the recipient is eligible for full ITC. Now, if you refer to the case laws, especially the advance rulings, they have said that the cross charge is necessary. But if you go to the circular 199/11 of 2023, dated 17 July 23, it states that internally generated services provided by head office to branch office, cost of salary of the employees of the head office involved in providing the said services to the branch office is not mandatorily required to be included while computing the taxable value of the supply, even in case where the full input tax credit is not available to the concerned branch office. Similarly, that particular circular also states that it is not compulsory. So I is not mandatory. That's what they say. Employees' costs can be excluded. And thirdly, they say that if distinct entity is eligible for full credit, no need to cross charge. So that is the circular gist. And cross charge is not compulsory if the recipient or beneficiary or distinct person is entitled for full ITC is the meaning of it. But still, for the purpose of accounting and branch method, if you want to do it, you are always welcome to do it, but valuation, wherever it is full credit is available, valuation will not be questioned. So what is the difference? Cross charge is a charge of tax on supply which is deemed supply made by the head office or services rendered by the head office to branch offices. If it is only distribution of the ITC, then it will be taking a form of the ISD. The cross charge is applicable for internal transactions, and generally the ISD will be coming into the picture when the vendors raise the bills on ISD. Now, clear comparison, ISD is used when the invoices are received from outside vendors like IT support services, statutory audit, etc. Cross charge is when it is services within the department from head office to branch office, etc. The main difference is in case of ISD, the invoice is received from external supplier in the name of ISD. But in case of cross charge, the bills will be received in the name of head office and they will convert that into some other service and that service will be charged to the branch offices. So what are the basic differences? Now the time left is hardly 5-10 minutes, so I'll just keep it. This particular PPT will be made available to you afterwards. So I'll just try to summarize it. The meaning is in case of ITC, third party gives you the ITC. Cross charge, ITC is internally generated from various bills which are received. Purpose is to distribute the ITC. And in case of cross charge, the purpose is to allocate the expenses. In case of cross charge, you can take the credit of goods, that is inputs, capital goods, as well as services which you have procured. But in case of ISD, it can be the credit of only services. It can't be regarding goods or capital goods. The section 261 makes registration for ISD compulsory. For cross charge, there is no specific requirement of separate registration. Distribution has to be according to the Rule 39 and preparation of invoice as per Rule 54. In case of cross charge, the invoice can be regular invoice and valuation principle if you adhere to wherever there is a question of exempt branch. Otherwise, there is no question of the valuation also. Frequency for filing the returns in case of the ISD is monthly. In cross charge, whenever you make bill, and that bill when to make is not specified. Now, ISD distribution, what is the work process? First, get the vendors' invoices, then prepare your books for the distribution, show those bills which are there in your GSTR 6 table 3, divide them into eligible and ineligible in table 4, distribute it to the beneficiaries in table 5. So that is what you have to do. Now, ITC distributed will be appearing into 2B of the recipient, and they can take the credit. That we already seen that Rule 36 makes it clear that the recipient will be entitled for the credit. The special provision for the RCM we already seen, so I am not repeating it. What are the challenges? So first of all, identifying the ITC for specific states is difficult. Now, even if you identify, what happens? Once it is on the basis of turnover, whether you identify or you don't identify, if there is a turnover in that particular state, it will be getting the credit, irrespective of whether it is getting, let us say, 2, 3, 4 according to actual. But if it is according to turnover, going to get 5, it will get 5. Unclaimed ITC risk. So if you don't distribute the ITC which you have received, then it becomes problem that the ITC will remain unclaimed. So what you should do? You have to see that the reverse charge mechanism invoices are taken in head office name, and the direct invoices where the tax is charged directly is taken in the name of ISD. ITC distribution for new branches. The new branches will not be able to get the credit for first 3 months because till the quarter is completed, you will not be able to distribute the amount to that particular branch which has started newly. So you can try to find out a method by which the billing is done directly to the new branch. ACZ units, there is a question, and it is necessary that ACZ should be given refund of whatever share comes to them. RCM blocking ITC, 1 month delay is there for distribution. So there is no remedy by which it can be overcome. Limited filing window. So you have to compare within 1 day because many times the GSTR 6A will not be available on 12th or 13th also. Now we see that 2A, 2B are available on 14th. So basically, comparison time with the actuals and whatever you are recorded is going to be a challenge. Then data collection and reconciliation, you will have to do it very fast to avoid the penalties. Otherwise, it is going to be a problem. Now there are certain problems in new registration. When actually the address, if it is same of the head office, they should not ask for more details. As such, there is no ISD will not be having a separate bank account. The bank account details are insisted upon. So unnecessarily we will have to open a separate bank account for the ISD, separate accounting for the ISD, and similarly, many a time they ask for the photograph of the office, and all these things are going on. So these issues which I have taken can be discussed provided there is a time left after completing the queries which are there, because already it is 6 o'clock. So according to me, we should go for the uh, questions. So if there are any questions, I'll take them first, and then whatever posers, if time permits or institute permits, will continue. So I thank once again all the participants and the institute or President Nadda sir, Prasanna Kumar, Vice President, Chairman Rajendra Kumar, and Umesh ji, who is a good friend of mine. So now we can start with the questions. I'll first try to find out whether there are any questions. Can you find out which are the questions which are there?
Yes, sir. So you
That will
can
be
take the
better.
questions.
Impreet, you can read it out.
Sir, there's a question that is it mandatory to register as ISD when there is no common credit to be distributed?
If there is no common credit to be distributed, there is no necessity of taking the registration. Next.
Then there's a question to differentiate between ISD and cross charge, which I think sir has already done it. Then we'll go for one of the client is operating in multiple states. The client have taken on rent office in different states to accommodate software developer. The client is software development company. All the bills and all activities is done by HO in Maharashtra. So whether ISD needs to be taken?
Yes.
Hello?
1 minute. I'll try to open the question box. Uh,
Whether it is mandatory for an organization dealing mainly in exempted suppliers to distribute ITC through ISD, as ultimately the ITC shall be reversible in the hands of recipient as well. Hello? Am I audible? Then is ISD registration mandatory even if there is no transaction whose credit is to be distributed? Dilip sir, you are on mute. You need to unmute yourself.
Okay. Process vendor invoice for such common functions. Already we have discussed this, so I don't think it is to be repeated again. 39(1)(a), the input tax credit available for distribution in the month shall be distributed in the same month. What if this was not done? That such credit becomes ineligible. Various notices being sent on such grounds. Actually, it doesn't become ineligible. It will become wrongly distributed. And for wrong distribution, they will levy the penalty, which is equivalent to the tax distributed wrongly. So, whatever you are distributed will be equal to whatever penalty you have to pay. Where the ITC is distributed by ISD without satisfying section 16 condition, not made payment to vendor in 180 days, or vendor not filing 3B, whether yes, definitely, if you don't follow 16 conditions, whatever is done in normal method, you will have to do it in ISD method. Here also there is going to be a question of accounting, because the payment is made by head office, not by the ISD to the suppliers. So that question is going to arise afterwards. So there are many lacunas in this particular system of ISD which will have to be corrected. Otherwise, there is going to be a problem. Now, Sanchita Somaya has asked if a company has no transaction, I think there is no necessity. And especially regarding then Akash has asked one more question. ISD rules covers invoices and credit notes, but do not provide for debit note. According to me, it is provided, and we already discussed that debit note facility is there. If there is no debit note facility, we can raise ISD invoice. That is also not a problem. Then again, Akash is asking, Akshay is asking, common RCM services received by head office, taxes paid there, self-invoice is issued to claim ITC in head office, and then separate invoices to be raised to ISD and disclose it GSTR1 to transfer the ITC. Yes, we already discussed this particular process. So again, there is no necessity of discussing it. Akshay again, whether ineligible credit must be distributed as eligible credit and then reversed in the recipient GSTIN 3B table 4B 1 or disclose in now 17.5, whatever is ineligible has to be done by the ISD only. That has not to be done by the recipient. Again, Akshay, does ISD needs to be distributed to unregistered location which has no outward supply, has no turnover? This is actually a moot point. According to me, there cannot be an office which you open where there is no activity. And if there is activity, there will be becoming necessary for cross charge. If you are doing the cross charge, registration will become necessary. But suppose you are not doing cross charge because every unit is getting full ITC and you are not preparing cross charge, then unregistered can be there. And in that case, when there is no turnover, where is the question of transferring it? Because the formula given is based on the turnover. And if there is no turnover, there is no question of distribution. But if it is specific to that particular office, which is unregistered, then it will be transferred to the unregistered office. So 39C cases, specific ITC of that particular office cannot be distributed to others. Then next, Akshay, is ISD required to distribute to SEZ? Already I have told you that SEZ also, one of the offices, they have got the turnover, but not in India. So whether you distribute it or not is a question. If you distribute it, they will have to claim the refund. There are certain clarifications which are necessary in respect of the distribution of credit by ISD to SEZ. So again, Akshay, what is the invoice has got both goods and services HSN? If you are speaking about suppliers invoices, either it will be for taking form of works contract or it will be taking form of composite supply. So if it is a composite supply, it will go to the goods. If it is a service given like transportation, loading, unloading, so I don't think goods and services will be coming into the same invoice just because the HSN used are different. Ultimately, the final value goes to service or it goes to the goods. That is what is to be seen with the help of our Schedule 2. Can we implement any other logical basis? Already I have told you that no logic, only turnover. Actually, that logical method is correct method, but they don't want to find out for every different dealer what is the method which they have adopted. So they have made it ballpark game that go for turnover method, no other method permitted. Can cross charge be continued instead of ISD provision? The answer is no. Now it is mandatory. Why it is mandatory? Already I have discussed. My supplier has generated e-invoice and not filed GSTR1, but the invoice is being auto-populated in 6A. Can I distribute credit? If it is appearing in 6A and you have got the invoice, then and you have recorded it in your books, you are going to distribute it. So when you will compare it with 6A, it will match. There will not be a problem. We have 4 manufacturing plants and registered office. Normally, there are very limited invoices raised on the registered office audit fees. Can we do away with the registration of ISD by getting the audit fees invoice unit wise? Now, I think it is Arvind Kumar. Arvind Kumar, can you tell me whether the audit report will be one or it will be multiple? If it is one, how the bills can be divided? If you are appointing internal auditor separately for every office, that is another thing. But statutory audit, I don't think it will be possible. What will be the time limit for expiry of credit on ISD documents? 16.4 will be applicable because it is ISD is a registered person. What is the eligibility of for ISD registration? Eligibility, if you are going to distribute the ITC, you have to take the registration. How to calculate ITC, that we have discussed it already. Ashish, there is a head office in Maharashtra and branch in 2 branches in Gujarat. Sales conference held in resort in Maharashtra and invoice CGST, SGST, etc., etc. Yes, you can transfer it to the Gujarat very easily by preparing the ISD invoice. Then Shravan Kumar, even when there will not be any common input branch wise, except to the only maybe audit fees. Yes, if you want to distribute the credit of now, actually you should have asked the question if I want to give up the credit of audit fees. So if you want to distribute, you have to take the IIG registration. Whether it is compulsory to take IIG registration, answer is yes. In case, say advertisement, one campaign can be for some specific 2 regional channels, 1 national channel. How will the distribution for 2 regional channels? Whatever you pay, you divide it in those states. But for common, you will have to use the method of turnover. Can we apply for IIG registration without having a regular GSTIN? Now, it is clear that it has to be an office of a supplier. And office of the supplier has got ITC which is distributable. So, definitely that IIG registration, if you want to take IIG registration, let us say you held an exhibition in Delhi. You don't have any office in Delhi. And there are certain charges on which you have to pay reverse charge. Can you take IIG registration? Answer is no. Over there, you have to take the regular registration also. But suppose if there is no reverse charge which is payable in Delhi and you have to distribute the credit which is forward charge, then it is not necessary. You can take the IIG registration. But according to me, they will not allow you to get registered unless until there is a regular number in existence. Because all the payments and everything regarding ISD are to be done by the regular number only. If the CGST, SGST of Kerala is received for and at the ISD, GST and Karnataka, where and how will such credit be reflected in 6.8? CGST CGST in Kerala. Are you saying that it is place specific GST for which the invoice is to be prepared? In such cases, it will be preferable if you take registration in that particular state where there are credits. If it is lump sum amount, you will have to better take a ISD registration in that state and distribute it. Don't take, because the CGST and SGST of Kerala will not get transferred to the ISD GST number of Karnataka. Good evening from CA Kapilagura, looking forward. Okay. So I don't know whether it was interesting or not. In the case of multi-state trading concern, whose common ITC is only bank charges and audit fees, the bank is maintained by the head office only. Is he still, already I answered it. In case of branch, does the cross charge billing head office where all outward billing is done, can the branch include expenses for which the ITC is blocked in cross charge billing? No. Head office is registered under GST at a rented premises, that already I have discussed with you, because it is a place specific. It will be better if the amount is sumptuous or good amount, it will be preferable if you take the registration over there. Madam, 60, 74 are very important. I'll take, let us say, 102. If
So
the
you can take
supplier, yes,
102, sir. You take it for the
I'm selecting random because now there are many.
Yes, sir. There are repeated questions. I can agree. Yes, sir. There are repeated questions. I agree. You can skip them out.
Okay, let us go to 103. How to comply with ISD in case of alcoholic liquor company where output supply is outside GST ambit. There is no question of distributing the ITC of alcoholic liquor. Whether the e-invoice mandatory, when there is no turnover, where is the question of e-invoice for the ISD? I am service provider based in Telangana, need to raise ISD invoice on one of my vendor, ISD in Maharashtra, should I tax IGST? Already we have discussed. Can single ISD invoice be raised for the whole of the month in respect of the numerous inputs received? Now, if you see the format of the invoice, you have to give the details of the invoice of which you are distributing the credit. If you can do that, there is no problem. If turnover is it is dynamic, when I'm reading it is getting changed. What if the turnover of one GST registration since beginning, but registration taken for other reason? I can't understand the question. Whether capital letters, whether ISD is applicable for expenditure recharge. Recharge of expenditure, I don't know. Like 2A, the problem we face, will face problem in 6A, yes. They are all portal problems. I am legal firm registered with GST, having office in multiple states. All locations are registered with GST. I do not claim ITC in any of the GSTN as my services are under reverse charge. No necessity. Sir, when someone has state GST input balance piling up in excess of the liability, not due to inadvertent duty structure, is there any way? So I don't think it is possible to cross charge. For taking ID registration, is it mandatory to cancel? Normal registration will continue. Don't bother about it. Then I'll go to 139, head office rent distributed through ISD or cross charge. Head office, is it, who is the beneficiary? If the head office beneficiary, then if it is, they are repairing support services, you can cross charge. But there is no question of distribution. Is there any mechanism like IMS? Yes, IMS is there in ILD also. 6A, you can keep pending accept, reject, or change the amounts. Request you to take up the example for ease of understanding. So already I have taken. Can ITC passed on through ISD mechanism be used for payment of GST liability? Yes. Already we have seen it. 36 rule tells you that. What is the consequences of non-compliance with the ISD provision? That already I have discussed. 122 will be applicable. Then 154 during the whole registration process of ISD, the GSTN portal has not asked for any bank details. So whether it is mandatory to furnish bank details, you are lucky if they are not asked. Whether ineligible ITC also needs to be distributed through ISD. Yes, you have to distribute it. It's mute. Now I'm fully listenable. How invoice raised by head office, but company has branches in multiple locations and claims their input on rent, telephone bills. Should they cross charge? It depends upon you. Cross charge is not compulsory. Separate books of accounts to be maintained for ISD. I think if I start with the accounts of the ISD, it will require further 1 hour. Because to understand the accounting of ISD, it is sometimes it goes to the single entity system. So better not to mix it up just now. But Institute is coming out with the book on ISD, where the accounting chapter will be separately there. So over there you can refer it. It will be coming out in May or June. We have 2 units under same PAN. One is ineligible for ITC. 2 we have to the ISD registration. One is ineligible. If there is no distribution of ITC, don't take registration. Now let us go to the is e-invoicing not applicable. So 187 and 188 I'll take. Whether GSTR 6A will be generated between 11 to 13. No. You are getting 2A and 2B now on 14th. It will be generated maximum earlier will be 12th. Maximum earlier. I am a trader and I receive ITC for other branches against exhibition expenses. Yes, it will be better if you register and transfer that particular ITC. So other questions I will have to skip because already it is half an hour more. So I thank the participant for participating and taking so much in interest that there are nearly 200 queries. So I thank very much, and definitely this particular ISD which they have taken out in a hurry has got many problems, and there are bound to be the what you call cases which will be coming up for the purpose of discussion.
Thank you, sir.
And decision.
Thank you, sir, for sharing your indispensable knowledge with us. Thank you on behalf of my GST committee, my chairman and vice chairman. I thank you all for the bottom of my heart to support this event and make this event successful. Thank you.
If there are any queries, you can write it to me on email.
Sure, sir.
Okay.
Thank you.
Thank you.